What if I told you that the signals you're waiting for are already there, just hiding in a time frame you're not looking at? Today, we're going to be diving into the world of hybrid timeframes, an advanced level of multiple time frame analysis that can give you a serious edge when trading the strat. You already know about the 5 major time frame periods to create our bias or base our analysis from: the daily, the weekly, the monthly, the quarterly, and the yearly time frames. But have you ever looked at the 2-day chart, the 3-day time frame, or the 10-day? Or what about the 2-week and even the 5-week charts? These aren't just random time frames. These are what I call the hybrid time frames, and they reveal secret signals that traditional time frames often miss. But here's what you have to understand: the market doesn't care about our calendar. Sometimes price action forms the cleanest patterns, like an inside bar, a shooter, or an outside bar reversal, but these patterns don't show up on the daily or the weekly charts. They show up on timeframes like the 5-day or the 10-day, and that's where the hybrid timeframes come from. By stepping outside the traditional framework, we can spot reversals, continuations, exhaustion moves before the crowd sees them. So let me show you what I mean. So here we have Amazon on the daily time frame. You have a bunch of red candles and green candlesticks, and we're kind of just chopping in a range, kind of like in a downtrend. But if we were to look at a different time frame, for example, let's take the 5-day chart. We're forming an inside candle on the 5-day. We don't trade the inside bar. We trade the break of the inside bar. So if we were to mark our high and low of this 5-day candle, we have a potential 2-1-2 reversal to the upside or a 2-1-2 to the downside. Now watch what happens when we get a new 5-day candle. You can see that it breaks a 2-1-2 reversal to the upside and it gets to its target. Now, if we look at this back on the daily, you probably wouldn't have noticed that we were inside on a higher time frame. But once we broke that 2-1-2 up on the 5-day, you can see that breakout continue for Amazon. Now, if it wasn't for that 5-day time frame, you probably wouldn't have noticed that we were just chopping inside of a range. But that 5-day chart let us know that we were consolidating, and we want to be there as soon as we break out of consolidation. Now, what makes hybrid timeframes so powerful is the combination with actionable signals or strat combos from the strat. You can have multiple potential signals that can trigger on multiple timeframes. Let me show you what I mean. So here we have SPY on the 11-day, the weekly, and the 2-week chart. Now, the reason why I'm showing these specific timeframes, one, because the 11-day is going to be opening up on Friday, April 25th. The weekly will be opening up on April 28th, the following Monday. And the 2-week is also going to be opening up on April 28th, that same Monday. And the second reason is because of the strat combos or actionable signals that appear on these timeframes. We have a 3-1 setup on the 11-day, a 1-3 setup on the week, and an inside 2-week hammer with new time frame candles that are about to open. Now, if you trade the strat, you already know what these strat combos are. And if you don't know what these strat combos are, you need to learn them. And if you need help memorizing them, or you would like a reference to look at when you're trading, check out the link in the bio to purchase the Strat Combos keyboard desk mat. And by referencing the desk mat, I know my trigger and the target for that actionable signal or that strat combo. I can trigger a potential 3-1-2 up on the 11-day. Now, if it were to trigger a 3-1-2 up on the 11-day and it were to continue in force, that would also coincide with triggering a 1-3-2 up on the weekly. If you were to trigger a 1-3-2 up on the week, you would also be triggering a 2-1-2 reversal on the 2-week chart. Let's see what happens. So the 11-day opens up first. You trigger your 3-1-2 up on the 11-day. On Monday, you trigger your 1-3-2 up on the week, which also coincides with the 2-1-2 reversal on the 2-week. And you can see that all of these time frames remain in force and start heading towards their target. Now, when you have a setup like this, a potential 3-1-2 up that can trigger a 1-3-2 up on a higher time frame that also triggers an inside 2-week on another higher time frame, these type of setups just reinforce the direction that price wants to head towards. And this kind of alignment is what builds confluences. And confluences is what gives us confidence. When you have multiple timeframes telling the same story, that is where our edge comes from. But it's not just about finding different actionable signals or getting early entries. Hybrid timeframes also help refine our stop loss placements and our targets. You'll see structural levels and candle formations that the daily simply won't show you. And this can help you stay in trades longer with more confidence or avoid taking weak setups altogether. Let me show you an example with this end phase trade that I took recently. So I took a put position in end phase, and the reason why I took it was based off this double inside week. You guys already know, whatever side you trigger, you have a high likelihood of continuing in that direction and also going for that second extension candle. So on day one, end phase actually triggered 2 down on the week, so I took puts. But you can see that we hammered on the day and we actually ended up hammering on the week. Now, should I be nervous about this trade? Not quite, because you know it's going to take at least a week to play out. Day 2, we got another green candle to the upside and we actually had an outside hammer to the upside. The following day, we triggered 2 up on the day. Now, at this point, we had an outside weak potential to the upside and I was thinking about cutting the position. However, I looked at the 3-day time frame and I noticed that we had been placing wicks at this area. Now, when I zoom in, I also noticed that we're in a lower low, lower high structure. When I place my fibs at my swing high and swing low, price actually wicked at this area 1, 2, 3, 4, 5, 6 times on the 3-day chart. So 18 days worth of a rejection, and that also happened to coincide with that 0.618. The next day, end phase had a gap down on the daily, and we continued to push down for the remainder of the week. Depending on the side that you break that double inside week, you have the potential to get twice that expansion, and we got double the expansion to the downside. Now, I was going to get out of this trade, but if it wasn't for the 3-day chart showing me the wicks at the 0.618, that's what allowed me to stay in that trade. The reason why I'm showing you this is because it can be any time frame that can give you a clue to potentially get in, get out, or stay in a trade. So if you're only using the standard daily, weekly, monthly, quarterly time frames, you're likely missing out on opportunities. Start exploring time frames like the 2-day, the 3-day, the 10-day, the 2-week, and the 5-week. You'll start spotting setups before they become obvious on traditional charts. And your trade planning will become more powerful and more precise. If you've been using hybrid timeframes already, let me know in the comments which ones you like the best. And if you're new to this concept, try it out this week. Pull up a 3-day or a 2-week chart on your favorite stock and see what it reveals. Don't forget to like this video, subscribe to the channel, and hit the bell so you never miss another strat breakdown. Thanks for watching. Trade smart, trade with confluences, and I'll see you in the next one.